All right, welcome to How to Be a Successful Stock Market Investor. My name is Tyler Ballhorn from StockScores.com, and I am your host tonight for this presentation, which will focus on longer-term trading. My webinar last night was focused on day trading and swing trading. Tonight, I'm going to focus on the sort of thing that you might do if you don't have a lot of time to dedicate to the market, if you want to manage your own retirement portfolio. That's what this is all about. So we'll begin with a little bit of theory behind the stock scores approach, what I focus on when I am looking for good stocks to buy. How long does it take to do my research each evening or each day? The little tour of the Stock Scores Education Center where you can learn about my method. And then to close off tonight's presentation, we will go hunting for opportunities. We will do some market scans and see if we can find some stocks that are worth considering tomorrow. So let's talk first with a little bit of theory behind the stock scores approach. Now, my aim is to find market-beating stocks. If you don't want to beat the market, then the best thing to do is go out and buy a very low-fee exchange-traded fund or mutual fund that mirrors the market. And so if you can buy an ETF that mirrors the S&P 500, less the fee, it will probably return somewhere between 9.5% and 10% per year on average, which means that in 7 years, you will double your money. It's not a bad thing. And if you want to be completely passive, I recommend that is the best thing to do. You will have down years when the market is down, but generally over time, if history is any guide, you should earn about 8% plus the dividends reinvested tends to be close to 10% on average. However, if you don't want to be average, I do not want to be average, then you have to do a little bit of extra work to find market-beating stocks. Now, I will tell you tonight how much extra work is required. It is not as much as you think, perhaps. It doesn't require a lot of expertise, a lot of financial knowledge. I've got some tools and some methodologies that can help you do that. But ultimately, what we're trying to do is find stocks like this. Now, this is a stock that I featured in my newsletter. I'm just going to get my drawing tool out here. Bear with me for a moment. Drawing tool, here we go. Let's do this one. So I featured this right here. Met all of the requirements of my rules. This is something we're going to look for tonight. I'm going to try to find stocks like this tonight. And in this case, this stock went up from $8 to $12, almost $12. That's a 50% gain. And it did it in, let's call it 2 months. That's about 2 months, 8% gain, or pardon me, 50% gain in 2 months. I don't know anything about this company. I have no idea what they do. But that chart, that image that you see on screen, coupled with my stock scores indicators, helped me to recognize that was a decent trading opportunity on that particular day. And so I buy these stocks, I write about them in my newsletters, and my students find these stocks using the tools I'm going to show you tonight. But that's what we're looking for when I talk about market-beating stocks. This is a stock that went up 50% in, let's call it 2 months, which is dramatically better than the 10% that the market goes up in 12 months. Right? So this is a stock that's beating the market. And this is the kind of thing that we want to find. Now, why do stocks move in strong trends? Relatively simple. Stocks go into strong upward trends when investors perceive, and I want to really highlight that word, perceive, that the company's fundamentals are getting better. Now, what do I mean by fundamentals? I mean the ability of the company to make money in the future. That's what companies do, right? The reason we buy a stock is because we think they're going to make lots of money. The reason Apple's shares have done so well over the last 20 years is because they have made boatloads of money and have grown those earnings dramatically over that time. Now, there are some stocks out there that make no money. talk about a little junior mining company that's pulling lithium out of the ground, or wants to find lithium, hasn't even found it yet, wants to build a mine. Those stocks aren't making any profit, and yet they too can go up in value. And the reason for that is because the job of the market is not to consider how much money a company makes today, but rather how much a company will make in the future. And there's a few variables in that. We want to know how much money the company is going to make in the future, but also how much those earnings will grow. So a company that makes $100 million next year, but grows those earnings by 20% per year, will get a much higher valuation than a company that makes $200 million a year, but only grows those earnings by 3% per year. All right, so it's kind of multidimensional in how that works. And a company that makes no money this year, but could make $100 million over the next 5 years if they find that deposit of gold or that oil deposit, or create a new technology that is going to help people who are in a wheelchair. Whatever need is fulfilled, it doesn't matter whether the business is making money today, it's all about what it makes in the future. So this particular stock went up in many reasons because they were growing, or the expectation was that their earnings would grow, but it's also about perception. Because one very important thing that I think many investors don't recognize, but should, is that how we judge information is largely dependent upon our mood. What we think is good is largely dependent upon what has happened to us recently. And so there are times when companies that maybe don't have great fundamentals, their stocks can still go up well because the sector is doing well. You know, if gold prices are moving higher and gold stocks are all moving higher, even a weak gold company might see their shares move higher because the perception of improving fundamentals has changed. And when you are in a bull market, investors will judge your fundamentals differently than when you are in a bear market. And so if you have an upward trending market, there's a tendency for most stocks to go higher. As the saying goes, rising tides lift all boats. Now we have a hot market right now for large cap stocks. So big companies generally are all going up because they are components in exchange traded funds. Exchange traded funds are attracting a lot of capital. And so the indexes, the big stock indexes, the S&P 500, the TSX 60, the Dow 30, the NASDAQ 100, those are performing very, very well. And most of the stocks within them are performing well because people are putting money into them. Meanwhile, small cap stocks, lower price stocks in general, have not been doing well, even when some of those companies are growing their earnings nicely because they are not in fashion. And so to return to my original statement about what makes stocks go higher, it is the perception of improving fundamentals that drives upward trends. And it doesn't matter whether those perceptions are right or wrong. If the perceptions are such that people are optimistic, stocks will go up. All right, so here, this particular stock, I featured that in my newsletter on that day, and it went up a lot. Sold it right about there, I think actually the day before. I don't know anything about this company, but the message of the market, which is what I listen to, and I've learned to speak market, and I'm going to try to teach you a little bit tonight about how to speak market. It's a different language, but the message of the market there was a positive one. There was abnormal price action, abnormal volume. My stock scores indicators were in the right place. And so that was a high probability trading opportunity on that particular day. Now, I want to tell you another little bit of wisdom that I gathered from the market a long time ago, and that is the stock market is not fair. If you think the stock market is fair, quit now and go to the casino. I'm being a little bit cynical. I don't want you to go to the casino. But it is true that the stock market isn't fair. There are some people in the market that have better information than others, and because they have better information, they can beat most investors by getting into stocks with improving fundamentals early and getting out when the story is priced in. Now, here's an example of a situation where the stock market wasn't fair, although I didn't mind. This particular stock I bought on this day. Why did I buy it? Because it met the requirements of one of my strategies, something I will talk about later, called an action break. It was breaking a downward trend line. It was behaving abnormally. There was this right here is called an action candle. We have a way to filter that for action candles on the Stock Scores website. We'll be doing that together tonight. At the end of the presentation, we're going to go hunting for these kind of things. In this case, the stock scores weren't all that good, but for this particular strategy, that's not important. So I bought the stock that day, and guess what? I don't know anything about what they do. Ocera Therapeutics, I'm assuming they're a biotech stock. They could be in the business of massage therapy for all I know. It's not what is important. What's important is that I bought it that day, and then I sat on it and I waited. And it didn't do very well for about a month, but it never gave me a signal to sell. One of the key things that I do is risk management. I look for indications from the market that I'm wrong, and this one never told me I was wrong. Didn't tell me I was right for a while until that day right there, which was very recently, when the stock gapped up huge. I think it gapped up 60% or 68% in one day, went from $1 to $1.65 or so, yeah, about 68%. And the news that drove that big price jump, one single day went from $1 to $1.60, $1.70, was that the company was being bought by another company. Now, when I say the stock market isn't fair, I'm going to tell you that I believe that the people that were buying on this day that created that abnormal activity that attracted me to it, they knew something was going on. Perhaps it was the lawyer that worked for the company that knew that the company was in discussions. Perhaps it was the executive assistant to the president who knew that something was going on. Maybe it was a large investment fund that had connections in the biotech industry and knew that so-and-so met with so-and-so over dinner on a dark night in September. I have no idea. But what I know is that the stock market isn't fair, and there were some people trading on new information that wasn't widely known. And without knowing anything, I knew that that was a decent trading opportunity, and I bought the stock on that day and enjoyed, for me, it was about a 50% gain because I bought it here, not here. But still 50% gain in maybe a month, a little over a month, 5 weeks. With that said, even though most stocks that beat the market do what I'm showing you tonight, which is begin their market-beating trends with abnormal activity, I also recognize that I'm not going to be right all of the time. And it's extremely important to kick your ego out the door if you're going to be an investor or a trader, and recognize that sometimes you will be wrong. We should not expect to be right all of the time, and therefore we need to have a plan for what to do when we are wrong. Here's one of my wrongs in the last month. I bought Under Armour right there. See, the volume was higher, the price action was strong. It met the criteria of one of my strategies, something called the action breaks, which is a new strategy. It's not even on the Stock Scores website yet, but it will be there in the next week or so. So I bought it there. Don't know anything about why I bought it. I know what Under Armour does because I've been to a sporting goods store and know that they make shoes and shorts and shirts for working out. Stock traded at $16, and going into that entry signal, when I bought that stock, I knew that the market would prove me wrong if it fell below 15. And so my plan was, if it falls below 15, I'm going to get out and admit that I was wrong. And it's not much of a impact on my ego because, A, I don't really care. And number two, I recognize that at the end of the day, I'm just following what some people are doing. I'm not doing this myself. I'm not doing the legwork to do the research. I'm just following what I perceive to be the smart money. Well, in this case, the smart money was wrong. That break higher on that particular day that I have circled was wrong. But because I have good risk management, I got out my exit signal a little below $15. And look what it saved me from. If I had not done that, instead of losing $1 and change per share, I'd be sitting right now with a $4 and change, no, $5 and change per share. So I minimized my profit by 5 times. Instead of losing instead of losing $5, I lost $1. It was actually a little more than that. All right, so that's risk management. We're going to talk more about that in a moment. But you have to go into the trading game recognizing that you are not going to be right all of the time and have a plan for when to exit if you are wrong. And my final little thought for you tonight is this. When we are right, we need to let the trade work. We need to let the stock do its thing. There is a tendency, if you are a normal human being, to sell your winners too early. And I've been guilty of this many, many times. It feels good to lock in a profit. We worry that our profit will turn into a loss. It bothers us when we see a stock that's up 30%. Maybe we have a $5,000 profit on the table. It bothers us when that $5,000 profit becomes a $4,000 profit because we didn't sell. And so the reality is we need a selling methodology that allows for a little wiggle room, because stocks need a little wiggle room as they trend higher. But at the same time, we need an exit strategy that will get us out when it's time to get out. Now, when the trade is working, we have to be patient. Here is a stock list on the Toronto Stock Exchange. It started behaving abnormally there. Was a good buy point there at 16 and change. And it hasn't given a sell signal yet. Now, it might have felt good to sell it at $20 and make a 25% profit in 5 months, 4 months. But if you did that, you'd be missing out on what's happened since, which is now a almost 50% profit, not quite. Actually, it's more than 50%. Let's say 16, 17, so $9 and 17. Yeah, a little better than a 50% gain so far, and it still hasn't told us to sell. So when you have a winner, you have to stick with it as long as it is winning. And with this particular trade, as long as this upward trend line is intact, it's a hold. If that upward trend line gets broken, and this is a weekly chart, by the way, so this is a very longer term approach to investing or trading. But in this case, as long as that trend line is intact, stick with the trade. If it gets broken, then it's time to sell. But you have to let your winners win. Now, what do I focus on when I'm looking for trading opportunities? The first and most important thing is abnormal trading activity. We're going to do some market scans with my tools at the end of this presentation. And really those scans are looking for stocks making abnormal price moves from predictive chart patterns. Now, the predictive chart pattern is where the human comes in. That's you and me. We have to look at those charts and ask ourselves, is this trend just starting or is it well underway? Is this stock breaking from the right kind of pattern? I can teach you the patterns that occur over and over again in the market. It takes a little bit of practice to see them, but with a little bit of practice, you can look at any chart and see these patterns. And then once we see them, we need to practice good risk management. If a stock chart looks like this, and then one day it breaks out like that, we're going to buy it here, but we're also going to plan to lose if the stock falls below that floor price. And the difference between these two prices determines our risk, and our risk tolerance, how much we are willing to lose, determines how many shares we buy. That is good risk management, our number one goal, capital preservation. Yes, we are going to lose some of the time, but if we can have relatively small losses and big profits, we can make market-beating profits over time. What is essential to do that is to have patience with our winners. If this stock starts going up and has a little bit of a pullback, that's okay. Little bits of pullback are okay. What we don't want is a trend break. But as long as the stock is generally trending higher, we are going to have patience with that trade. Now, we should not try to get in at the low or out at the high. We're trying to capture the middle ground. If you try to get in at the low and out at the high, you will go broke because they're almost impossible to find. So take away that expectation. Take away the desire to buy things at the absolute low. I want to buy things when they're starting to go up, not trying to find them when they're going to end going down. There's a saying in trading, we don't want to try to catch a falling knife. Wait for that knife to bounce off the floor and pick it up when it's safe. So here's the chart of Air Canada. There's a few predictive patterns on this chart. So my action break strategy or even my bottom fishing strategy picks Air Canada right there. My stock scores simple swing weekly, which I'll talk about later, picks this Air Canada right here. Both times was good. This one got you in a little cheaper, maybe at $11 a share. But this one got you a little more instant gratification because it ran higher right from that entry point. And you can see on those days, we had abnormal volume, abnormal price. Sorry, this is weeks. This is a weekly chart. Abnormal price, abnormal volume, stock scores in good place, abnormal price, abnormal volume. Look how the stock scores were going down when the stock wasn't doing anything. And then they spiked higher right in here when the stock came alive again. And they stayed high as that stock trended higher. Now, incidentally, Air Canada has broken its upward trend 2 weeks ago. So there was a signal to sell Air Canada 2 weeks ago. But if you bought it here at 16 and you sold at 25 and you held the stock for 1, 2, 3, 4, 5 months, you have earned a market-beating return. You've earned better than probably a 55% profit, maybe even 60% profit. I'm just doing the math in my head quickly. 55% profit in 5 months. That is a market-beating return because remember, the market normally earns about 10% a year. So far this year has been pretty good. Some markets are up 30%, but generally they're up 15 to 20%. Very strong year for the market right now. Now, how long does it take to do this? Well, I have a number of strategies that I do for investing. Stock score simple, abnormal action breaks, bottom fishing, abnormal breaks. Those will take you about 15 minutes a day to apply. You don't need to do them every day, but the more often you do them, the better chance you have of finding strong stocks. Not everyone wants to do this every day. Not everyone wants to do 50 to 75 trades a year. If you want to do 10 trades a year, you're going to focus on these strategies where it takes 15 minutes a week. Stock score simple weekly and the ETF version of that strategy. Now, incidentally, this is new and this is new. If you go to the Stock Scores website, they aren't there yet, but they will be there in the next week or two. So these strategies are all taught in the Stock Scores Education Center. I'm going to show you that now. I should have opened a browser. I didn't, so bear with me for just a moment. Sorry, I just have to... I was messing around with my computer and I didn't open my browser, but no problem. I can do that quickly. Go to the Stock Scores website. Just loading this up now. I have to log in because I'm going to use some of the member tools. Okay. So there you see the Stock Scores website. We're going to go into the Market Scan tool. And we're going to run some of these scans. Actually, no, we're not going to do this yet. We're going to do this after, at the end of the presentation, we'll do market scans. What I want to show you right now is the Education Center. The Education Center is where you learn my approach. So these are some free lessons you can go check out. There's just videos there. If you want to learn the theory behind what I do, for example, how to read a chart pattern. We talked about predictive chart patterns. There's a lesson for that. Okay, it talks about support, resistance, optimism, pessimism, price volatility, and abnormal activity. Those are the 6 things that you need to know, and they're really all that you need to know to pick stocks. You want to watch a video that explains it, click on the little video icon, and there is a video that is 30 minutes long that will go through all of these concepts with me narrating, explaining how they work. So that's how the foundation area works. Once you understand the theory, then you learn the strategies. And here are the investor strategies, the rules for when to buy, when to sell, how to manage risk, all of those things. And as I said, I have a couple new ones coming. You don't see the Stock Scores Simple Weekly ETF, and you don't see the action breaks. Those are new ones that are coming very soon. But again, with these, there is a lesson, written lesson, that you can watch or read. And then there is a video that explains that particular topic. All right, so all of this comes when you purchase Investor Access. If you want to learn how to day trade and swing trade, that's covered in the Active Trader area. Tonight's webinar is focused on Investor, so we'll stick to that. But that is what the Stock Scores Education Center is all about. Now, the Investor course gives you access to those theory lessons, the foundation area. Plus, it gives you access to the investor strategies. It gives you access to the market scan tool, which is what we're going to use tonight to look for opportunities. It gives you that access for 6 months, and then after 6 months, you pay $300 a year to continue to use that tool. Trust me, that's the best deal going. For the amount of money I spend on data to build all of those charts and do all the analysis, it's a bargain. And finally, you get email support from me so that if you have a question about my strategies, about risk management, about any of the concepts taught in that particular course, I personally answer those emails. In addition to the online training, I will be doing some live webinars in November. We'll be doing a foundation review for 3 hours on Saturday morning, November 18th. I will walk you through all of the theory, answer your questions as I go through it. Once we've done that, about a week and a half later, we're going to run the Investor Strategic Practice sessions. Each night, Monday to Friday, for an hour, we are going to do market scans together. You're going to watch me do the market scans. The first night, I'll do the work. Second night, I'm going to get you to pick the stocks. By the end, you're going to be evaluating the stocks that I put on the screen. And then at the end of the market scan that we do, I'm going to tell you what I thought was good. You're going to compare with what you thought was good so that I can teach you what to look for and what to avoid. Now that's for the investor students. For those who do want to day and swing trade and take the Active Trader course, I'm also going to do a month of live trading in front of you. I do this every month, so you pick the month you want to do it whenever you're ready. And in those sessions for the first hour, I build the watch list. I look for what are called worm entry signals. We do market scans for swing trades. And then my algorithms monitor the market throughout the day looking for day trades. And when one appears, you get an alert, a vocal alert plus a visual. And then at the end of the day, we also do some more work to look for some swing trades. Now again, tonight's focus is investor, so that's what you get if you do the investor course. But if you do the Active Trader course, you get this as well. Now all of that is going to be free to anyone who registers for the investor or the Active Trader course before Thursday, November 16th at 11 p.m. The investors will get the foundation session on Saturday, the investor session on Monday. The Active Trader will get those 2 sessions as well, but also the Active Trader session on the month that they choose. What are the costs of these courses? Investor course, $2,495 Canadian. Active Trader course, $34.95 Canadian. It includes the investor course. If you want me to walk you through the training 1 week at a time for 16 weeks, primarily focused on active trading, then consider the mentorship course, $54.95. It's really just me teaching it to you step by step for 16 weeks in a row, giving you homework each week or most weeks, and answering your questions as I do that. Small group, only 15 people get into the mentorship. That is $54.95 Canadian. It includes the active trader. It includes the investor. If you want to upgrade, if you do the investor now and you want to upgrade later to active trader, you pay the price difference plus $250. Now, before we do some market scanning together, I'm going to just put up this poll. I put up this poll last night as well, so you may have seen it then. The poll essentially asks if you want to receive an email from me this weekend with more details about the courses. So you can answer yes or no to that. I will leave that up for about a minute. And in the meantime, if you have any questions for me, now's not a bad time to enter them in the question box. And I can try to answer those at the end. And then once we're done this poll, we're going to do some market scanning. We're going to apply the process that I use to find longer term trades. Okay, so I'll leave that up for a little bit longer. And I won't email if you don't want me to. It's up to you. So, and again, if you answered this during yesterday's webinar, you don't really need to answer it again because you're going to be on the same list. But if you do, that's okay. I won't send you twice. Okay, so we'll close this down in 10 seconds. And then we'll do some market scanning. The benefit to attending these live is you get to see the market scan and the process. I am recording this as a video so that you can watch it later, but it takes me a little time to get that up online. So, all right, so let's kill the voting here. Thanks everyone for doing that. And in just a moment, you should see my screen come up. Now, we're going to do market scanning next. I'm going to leave that up now. That's the URL if you want to go register for the course, stockscores.com/learn, or you can just go to the StockScores website, go to Trader Training, learn how to trade. Takes you to the same page. Let's jump over to the StockScores website now, and I can work my buttons here. All right, so what we're going to do is we're going to run a couple scans. So the market scan tool allows me to filter the market with all these filters that are available to me. You can see there's stock scores filters, price filters, volume filters, momentum filters. You can build your own scan if you want. You could say, let me look for stocks on the Toronto Stock Exchange that have a signal score better than 80, sentiment score better than 60, that made an abnormal gain today, and traded at least 100 times, which isn't very often, but I could run that scan, and it gives me a list almost instantly of the stocks meeting those criteria. What we're going to do tonight is use some of the preset scans. That's what most people use, is the presets. You can build your own and you can save your own, but we're going to use the presets. So we're going to do the abnormal breaks scans for the Canada and the US. That's the one I use most often right now. And it looks for stocks making abnormal price gains, and then we have to evaluate the chart pattern. So we're going to do Canada first. And with Canada, we're going to view these in the slideshow chart viewer, which allows me to go through the charts one at a time, looking for good chart patterns. All right, so here you can see pretty obviously the abnormal volume, the abnormal price movement, very cheap stock. This was a 9-cent stock. I've sorted my results by price, so we're doing the cheapest ones first. That looks pretty good. But I'm going to look at a longer term chart, which is what I always do for multiple time frame confirmation. Looking at the 3-year chart, it's okay. It's not awesome. I'd give this a 7 out of 10. But if you're into penny stocks, I think it has pretty good potential. Okay, let's go to the next one. Mega Uranium, which is actually a stock I own already. Had a big day today, up 25% or so. Breaking a downward trend line, strong volume. Many uranium stocks were up today. We'll probably see another one. With this particular strategy, we don't care what the stock score is. With some of them we do. When we do the stock score simple scans, we definitely care about the stock score, but for this one we don't. Let's take a look at the 3-year on this one. So pretty good, not great. I'd give it a 7. It's going to run into some resistance at 30 cents. So we always think about support, resistance. Support on this, if you were to buy it, I would say if it closes below 14, I'd be worried. So in that case, you've got 6 cents of downside and you've got 10 cents of upside. And that's really what I don't love about it. It doesn't have enough upside potential for the downside potential. Again, I think it probably goes to 28, 30 cents, but whether it can break through that, it's possible, but it's not super high probability. So let's keep going. Laramide Resources, nice break of a downward trend line. Pretty good volume. Let's take a look at the 3-year. So I like this. I'd give this a 7.5, 8 out of 10. I wish it had built a little bit of a rising bottom first, but looks good. So that's our best so far. Denison Mines, another uranium stock, I believe. Breaking the downward trend line. Look at the volume coming in. We're seeing lots of uranium stocks today because that was an area of the market that was strong. I'd give this a 7. Risk reward isn't ideal. I'd give this a 6. It's going to encounter a fair bit of resistance. UR Energy, I'd give this an 8. I actually feature this to my followers today. A little better upside. Going to run into resistance at 110, 115. So it's got about 2.5 to 1 reward for risk potential. That's why I like it a bit more than some of the other uranium stocks we've looked at. This looks pretty good. Champion Iron. Let's take a look at a 3-year on this one. Yeah, it's going to run into some resistance here. This is a pennant break. I'd give this a 7 out of 10. Stock's already made big gains. You can see it started behaving abnormally back where my cursor is with strong volume. That was really the time to consider it. And now is a good continuation pattern, but it's not a great sort of initiate the position pattern. Don't love this one. I'd give it a 6. Sprott, I'd give a 6, mostly because of resistance that it's going to hit. Next Gen Energy, it's pretty good here. Let's take a look at the 3-year. Yeah, I'd give that a 7. Again, the reward potential for the risk you take isn't awesome. Pony, I like this. I'd give this an 8. Okay, breaking a long-term downward trend line, big volume, big price action, bouncing off of long-term support. 8 out of 10, probably has a 70% chance of moving higher in the weeks ahead. Here's the uranium participation company. Below the downward trend line still, I'd give it a 6. So I'm talking about things like trend lines and reward for risk. These are all concepts that get taught in the course material. So if it feels a little bit like I'm speaking Greek and you don't speak Greek, then it's because you haven't learned how to speak the market language yet. I can teach you that. Take you a weekend to learn how to speak market language. And then it takes you some time to practice to know what to look for in these charts. But it's not really complicated intellectually. Just takes some time and energy to put in, and along that path, I'm there to help you by email. If you have questions, I'm there to help you with it. So I've been going through all of these. I don't really like any of them. So we picked a few of them at the start, more in the cheaper stocks, mostly in the uranium sector, because that was a strong sector today. Let's run that same scan on the US market and run the scan. So it found 69, a lot more. So because it found a lot more, instead of doing the slideshow view, I'm going to do the gallery viewer. The gallery viewer allows me to go through 10 stocks per page so that I can just get through it a lot quicker. And because I've practiced this a little bit, I know what I'm looking for. If I see something I like, I click on it, and it makes the chart bigger. If I want to look at the longer term chart, I click on the little 3-year icon at the top of the chart, and it brings up a 3-year weekly chart. And again, I can click on it, make it a little bigger. Now, we already looked at Denison Mines. It was on the Toronto Stock Exchange. It is also listed on the Amex in the US, and so it comes up as well. No surprise, really. Bouncing off support at 40 cents. Some resistance there. Good upside potential to 80 cents. If you're in Canada, buy the Canadian listing. If you're in the US, buy the US listing. All right, so I'm going to zip through these. There's UR Energy, which is one we already picked. It also trades on the Toronto Stock Exchange. There you see the US version of it. So I'm going to go through these. Here's Uranium Energy, another uranium stock. Just lots of uranium today because that was hot. This particular one's not bad. I rated this a 7 out of 10. I went through these stocks with my Active Trader Live subscribers this afternoon, and I rated this a 7. It's got some resistance that's going to have to fight with, but I love the abnormal activity today. Very strong volume, strong price action. So it's one where if it's going to work, it could work huge, but the probability of it working is a little lower. Even though this stock has already gone up 144% today, it could easily go up another 400 or 500% because its real resistance zone is up around $7. So it's kind of a high risk, high reward setup. This one is a nice break of a downward trend line. Some volume coming into it. I bought this stock right, I'm pointing at it with my finger, but of course you can't see that. So right in there is when I bought it, early in October. Sort of been patiently sitting on it for a while. Now it's coming alive. You know, I love it when stocks go up the next day, but that doesn't always happen. But as long as it holds its pattern, doesn't give us a sell signal, just stick with it. This quick logic looks interesting on this time frame. Let's take a look at the 3-year. Yeah, it's got some resistance it's going to deal with. I'd give this a 6 or 7 out of 10. Not quite awesome. This is another one I own. I bought it at the start of October, right there. And it didn't give me a sell signal yet. It's taken a little bit of patience, but it is coming alive today with some abnormal action. See the volume coming in, price action. So I'm hopeful that this is the start of something big and we'll see it make a big move. I think you could consider that one tomorrow. Looks pretty good. All right, let's try to go through these a little quicker so you can all get on with your relaxing evening. I know there's some hockey on tonight. I know not everyone's in Canada. Most of my followers are in Canada, but not everyone is. Of course, if you aren't from Canada, you probably don't understand our infatuation with hockey. Here's the overseas ship holding group. A lot of shipping stocks have been doing well lately. A little bit of volume coming in, a little bit of good price action. I don't think it's quite abnormal enough for my liking, and so I'd give it a 6. Okay, we'll go to the next group. Got a few more pages of these, so I'm going to go through these a little quicker. TTI, I'd give a 7. I like that it's trying to break this downward trend line after being pretty ugly for a while, breaking up from a rising bottom. So that's a solid 7 out of 10 today. Now, doing this process is how I find, the stocks that might make better than 100% gains in a month. And I've had probably 4 or 5 of those big gainers in the last 5 or 6 weeks. And all I do to find them is what I'm showing you tonight. Running this particular scan, looking for good chart patterns. I like this one as well, Smart Sand, SND, breaking up through resistance, pretty good volume today. I'd give this a 7.5, maybe even an 8. It's very good. I'm going to just take a look inside today's action. I actually day traded this stock today, but I sold it before the close, and now I'm wishing I hadn't. 3-year, yeah, I think that's solid. Like I said, I bought it this morning as a day trade, and I sold it at the close just because that's what I do with day trades. I didn't even really look at the weekly chart. That was dumb of me, because that looks pretty good. This is a buyout, I think, so that's not something we'd want to trade. When a stock gets bought out, they've basically put a cap on the upside because the price has been set. Yes, sometimes someone can put in a competing bid that's better, but it doesn't happen very often. So another uranium name, breaking a downward trend line. Pattern's not great there. Now, if you're totally confused about what to look for in the pattern, I can teach you that. It's all in the course material. Yeah, not quite good enough. Cody, no. So I'm going through these as quickly as I can, and I know it's fast. So this is interesting. When we were doing the Toronto Stock Exchange scan, we saw this stock as well, Manulife, but the chart didn't look this way. And the reason it didn't look quite the same is because Manulife on the New York Stock Exchange is trading in US dollars, and on the Canadian Stock Exchange is trading in Canadian dollars. The Canadian dollar has dropped relative to the US listing, which makes the Canadian listing go up more than the US listing because in relative terms it's cheaper, so people pay more for it. So that's why there's a difference in those charts. Either way, it's a good looking stock. I don't love it. I like the pattern on the US version better, and my expectation is that the US dollar probably outperforms the Canadian dollar in the next little while. So I'd give that a 7 out of 10. This one looks pretty good, NGHC. Let's take a look at the 3-year. Yeah, now that I look at the 3-year, I see some resistance in the $25 to $26 range. So I'm going to give that a 7 out of 10, not an 8. Generally, 8s are stocks I buy. 7s I might buy if I see some further proof in the market the next day. 6 I generally don't buy. 9s rarely happen. 10s never happen because that would be risk-free, and there is no such thing as a risk-free trade. All right, we're almost done this process here. I think we got one more page to go through after this. But, I talk about this process taking 15 minutes a night. I can actually do it quicker because I've got lots of practice. But even with me talking and explaining things, we're going to do this whole process in probably less than 10 minutes. Dillard's, pretty good. Retail stock doesn't get me excited because retail's been so bad, but I'd give this a 7 out of 10. Good market action today. All right, now we're just doing one strategy. I have 5 or 6 strategies, and which one you choose depends upon the amount of time you have, your interest. Do you want, conservative ETFs or dividend-paying stocks? We can search for all these things with the tool. I'm giving you kind of the broad strokes tonight, but there's a lot we can do with this tool, and the beauty of it is you can do it from any computer, and you can do it quickly. You don't have to worry about downloading data and all the extra work that comes with it. So that is the end of my presentation. I'm now going to answer questions, but I do want to give you my email address in case you have questions after the fact. You can email me, tylerb@stockscores.com. That goes directly to me. I really encourage you to go check out my Twitter feed. I do post charts of stocks that I've traded. I post sometimes the stocks I trade on an individual day so you can see what I'm doing. Sometimes I post a picture of me at a ski hill just for fun. So if you want to see a little bit of my stock picks and my lifestyle and that sort of thing, go check out Twitter. The other thing you should check out is my YouTube channel, which is just go to YouTube and do a search for Stock Scores. Subscribe to the channel because each week I upload a market analysis video where I talk about whether the market's bullish or bearish and where there's opportunity. I do a little trading lesson each week, and I highlight my trade of the week as a sort of educational thing. So really recommend you go check that out. So now what we'll do is answer any questions that have come in as best I can. Just going to, got lots of questions. So I'll get through as many of these as I can, and if I miss yours, my apologies. You can always email me afterward. It looks like some people had trouble with my screen, but did you guys see my screen? Some people were getting a blank screen. I don't know why. Anyway, hopefully most of you saw this. I don't know why that was happening. I did record this as a video, so you can always watch it later. Where am I at here? Does Stock Scores have real-time charting? No, our charting is delayed, which is fine for position trading, swing trading, even a little bit. For day trading, I would recommend you get real-time charting from your broker. Do you still have the pullback play strategy on the daily time frame? You can do it. I don't love it. I don't find that it's got a great margin for profitability, so I don't do that a lot. What is the cost for membership to your Stock Scores website with market scan features? Once you buy the course, it's $300 a year or $29 a month. For rising stocks, do you use an automatic trailing stop or do you adjust manually as it passes resistance levels? We do neither. We do adjust it manually based on an indicator that I have for moving that floor price up. And that's something I teach in the course material. So if you bought the course recently and you haven't done the live training yet, then, so if you bought it since my last course was in June, I think. So if you bought it since June, you're going to get access to those, that Saturday session for free. And you'll be getting an email from me about that probably next week. If you bought it 2 years ago and you want to do it again, you can subscribe to it. It's $195, and you just go to the upcoming events page to do that. What do you recommend for a trading platform for Canadians? It really depends on what kind of trading you want to do. If you want to focus on Canadian stocks, I don't recommend day trading the Canadian market. It's not very liquid. And so for that, I would just use stock scores plus your brokerage's platform for entry. If you want to day trade the US market, then use TradeStation. It's the best, and it's not necessarily the cheapest, but it is really the best, and I make more money because I use TradeStation. Next question. Thoughts on cannabis stocks? Most of them have gone parabolic, and I'm always wary of charts that go parabolic. So if I pull up this, for example, is a very strong cannabis stock. See how if I was to draw a line across these bottoms, it would become a curve? So that tells me that it's getting a little overextended. I don't see a reason to sell it yet, but I would definitely be dancing close to the exit door. These stocks have been going up for quite some time, and I just think they're risky. And so if you own them, I wouldn't sell them yet, but I would maybe sell them tomorrow if there was a sell signal. But you want to watch for that pretty closely. I got to find my questions here again. I think that's it for questions. Yeah, most people had no problems with the screen, but one or two did. So I apologize to those that did. I don't know what was going on, but hopefully you get a chance to watch this in the video format. For the abnormal break scan, what time frame do you use for the initial look at the chart? I use an 8-month daily. And if I like the 8-month daily, then I look at a 3-year weekly. All right, so I think I got all the questions. So I'm going to wrap it up. Again, I'll put my contact information up on screen for you. There's my email address. Check me out on Twitter @StockScores. Follow me on YouTube. And if you answered yes to wanting an email from me with some details about the courses, expect that hopefully this weekend. And if you have any questions that you think of after the fact, please email me. If you're watching this as a video and you want to get on the email list for the upcoming course, just fire me an email and I'll put you on the list to send you the details of the courses and how to sign up for it. The deadline to get all those bonus material is Thursday next week. And so it gives you a little bit of time to check things out and ask me questions so that you can decide if this is right for you. I want to thank you all for being here tonight. Have a great rest of the evening and trade well.